Hello viewers, welcome to CA Talkies. In this video, I'll be comparing PPF with tax saver fixed deposits. So guys, I'll be answering two questions in this video. First, what are the major differences between PPF and tax saver fixed deposits? And second, which is the better choice for making the ATC investments? So there are three major differences between PPF and tax saver FDs. These differences are with respect to the interest rate, the taxability and the lock-in period. First, interest rate. PPF में आपको 7.1% per annum का interest मिलता है, whereas tax saver fixed deposits offer anywhere between 5% to 5.5% that varies from bank to bank. Second, taxability. PPF interest is completely exempt from tax, whereas FD interest is taxable as per your slab rate. And third, lock-in period. PPF comes with a lock-in period of 15 years, which can be extended by 5 years at the choice of the investor. On the other hand, tax saver FDs have a lock-in period of 5 years. Now let's take a small example to understand the taxability of the interest income. Let's say आप और मैं 20% tax bracket में आते हैं and we want to save tax by making an investment under section 80C. Accordingly, I invest 1 lakh rupees in a tax saver fixed deposit which offers me a return of 5.5% per annum, whereas you invest rupees 1 lakh in PPF. एक साल बाद I would earn an interest of 5,500 rupees from my FD. But since FD interest is taxable, I'll have to pay 20% tax on this interest, which would amount to rupees 1,100. So my actual interest income is not 5,500, but only 4,400 rupees after tax. Now let's compare it with your investment. PPF would give you a return of 7.1% per annum, which is rupees 7,100 at the end of the first year. Since PPF interest is fully exempt, there would be no tax on this interest income. So clearly, PPF would offer you much higher returns compared to a fixed deposit. Now let's come to the second question. How do you choose between PPF and tax saver fixed deposit? You need to first analyze your risk appetite. PPF and tax saver FDs are meant for those investors who are looking for risk-free returns on their long-term tax-saving investments. However, if you're an investor who's looking for 20 to 25% returns on their tax-saving investments, then ELSS is the obvious choice for you. You can watch my video on ELSS linked in the description below. Now let's move on to the next step, determining your investment objective. देखिए, PPF और FDs का एक common objective होता है, that is to save tax under section 80C up to rupees 1.5 lakhs in one financial year. But there could be other objectives as well, such as a high return on investment, saving money for some future use like marriage, education, new house or a new car, or simply diversification of your portfolio. So if your main objective is to make more money on your investment, then we've already seen that PPF is the obvious choice for you. Next, the future use will help you determine the extent up to which you would like to block your funds. For example, if you're saving money for your child's education or marriage, then the lock-in period of PPF of 15 years might not be all that bad. Or if you have some medium-term objectives such as financing a new house or a new car, then the 5 years of lock-in period of FD might be a better option for you. And lastly, if you're simply looking to diversify your portfolio by including some long-term risk-free investments, then you could simply choose any option, or you could even go for a 50-50 combination of both FD and PPF. Guys, you can read more about PPF and tax saver fixed deposits in the links shared below. I really hope this video helps you out. Take care.